Good morning. Let's dive into the latest developments affecting our commodities trading strategies today. Gold prices have stabilized around $2,983 per ounce after reaching a record high of $3,004 last week. This stability stems from ongoing geopolitical tensions, concerns over rising tariffs, and expectations of further US interest rate cuts. Investors are cautious due to potential recession fears, declining consumer confidence, and increasing inflation expectations. Notably, President Trump's plans to discussing ending the war in Ukraine with President Putin could influence global trajectory. If you're trading in gold, consider maintaining long positions to hedge against geopolitical uncertainties. However, stay alert to diplomatic developments that could swiftly alter market sentiment. Moving on to oil prices have risen, with Brent futures up 0.6% to $70.99 per barrel. This uptick follows the US commitment to continue actions against Yemen's Houthis until they cease attacks on shipping routes. These geopolitical tensions, coupled with global economic slowdown and mixed indicators from China, contribute to the market's volatility. For those trading in oil, it's prudent to monitor geopolitical developments closely. Consider diversifying portfolios to mitigate risk associated with supply disruptions. In the metal side, copper has surged over 20% this year, nearly $4.90 per pound. This rise is primarily due to proposed US tariffs on commodities like copper, leading to stockpiling in major markets. However, concerns about global economic growth and China's weak consumer demand suggest potential price corrections in the latter half of the year. If you're trading in copper, think of securing profits at current high levels and prepare for possible price corrections. Stay informed about tariff developments and global economic indicators. Indonesia reported a larger than expected trade surplus of $3.12 billion in February for palm oil, driven by a nearly 90% increase in palm oil exports, totaling $2.27 billion. This surge highlights the robust demand for palm oil in global markets. Traders in palm oil should capitalize on the current demand surge, but remain vigilant about potential policy changes in Indonesia that could affect export dynamics. The US-China relationship has become increasingly strained, evolving into a strategic conflict encompassing military, economic, and geopolitical dimensions. This tension introduces uncertainties in global trade and commodity markets. Additionally, natural disasters such as droughts and floods continue to disrupt supply chains, leading to increased volatility in commodity prices. In light of these geopolitical environmental factors, it's crucial to diversify your investments across various commodities to mitigate risk, utilize hedging strategies, including futures and options to protect against adverse price movements, stay informed about global economic and political trends to anticipate market shifts, and consider investing in safe haven assets like gold to hedge against geopolitical and economic uncertainties. Let's remain agile and informed as we navigate the dynamic markets this week, and speak to you again next week.